Okay, guys, anyway, good afternoon and welcome to today's session. It's one of my 2 sessions that I do a week on FX Street. Very happy here. For those of you who've never attended, my name is Jack. A little bit about me. Been trading for 8 years institutionally. Started proprietary as a one of the graduates at a grad scheme. It's called Marex. Sort of moved on from there. I have worked as an analyst in the City of London, very well respected news service. I have managed and traded hedge funds, and obviously I'm here today to hopefully instill a little bit of some of that knowledge that I've had over the last 8 years. I've traded pretty much every product that you can imagine, so if you've got any questions about anything FX, commodities, feel free to please put them into the box at any time. But today what we're going to be doing is, guys, we're going to be focusing on something I call the oscillator strategy. It's actually something that I was given by a friend of mine, and I've had a little play with it. A guy with 20 years experience in institutional trading, used to trade at Barcap. I think he started a fund in Malaysia now. Very, very nice guy called Toby. And absolutely applicable to all markets. If they're not applicable, Driv, I will let you know. I do tell you what I favour them for. This one is mainly applicable sort of to currencies and also a little bit of gold. Markets where you see sort of ranging high level of percentage of market sort of ranging on an intraday basis. Anyway, guys, let's crack on, shall we? So before we begin, as always, I'm just going to start with the standard disclaimer there. So spread bet on FX and CFD trading carry a high level of risk to your capital and can result in losses that may exceed the initial deposit. And if these products may not be suitable for everyone, so please ensure you understand all of the risks associated with trading. The information and comments provided herein under no circumstance are to be considered an offer or solicitation to invest, and all information provided is believed to be accurate at the time of production. Nothing herein should be construed as investment advice. Very important, that one. Information provided within this room is the personal opinion of the moderator and not FX Trade or Trademo. This content, therefore, does not constitute financial, investment, or tax advice. Trademo and FX Trade accept no liability for the content or comments made during this session. So, guys, basically, how many of you like to trade on an intraday market, guys? How many of you guys are swing traders? How many of you guys are long-term traders? I mean, over the last few sessions, we've gone through a number of different strategies that I actually apply. Driv is a swing trader. Well, this oscillator strategy is actually something that is designed for the sort of the ultra short time frame, sort of the 5-minute time frame. It hasn't necessarily not got an application to be used on longer time frames. So again, maybe what you do is take it away and have a little play, tweak it for that swing trading. But basically, the oscillator strategy is something that's basically designed to optimize trading in ranging markets. And Daniel, in terms of scalping, obviously, I honed my skills as a scalper. Obviously, very, very hard with retail brokers because of the spread that you have to pay. But again, I think I did do a scalping session. And if I haven't done a scalping session, I'll take you through some of the sort of mini systems that we can use for scalping in the markets, if you like, Daniel. So, as I said, designed predominantly for sort of the 5-minute market. And as I say, it is designed to optimize trading in a ranging market. Okay. We can see that it does use sort of 3 main indicators, but the biggest thing that it uses, guys, as always, is discretion. This is something I like to really instill. Yes, it can be, Driv. I would say that you need to apply this maybe to index futures with a slightly higher level of volatility. So DAX might be a bit too much because you get big swings in the DAX and things push through levels. But certainly things like the NASDAQ, the Dow, the CAC 40, even the S&P, these things can be applied to. I've never really used it in the Euro stocks, though, because the Euro stocks can be very, very choppy at times. But again, maybe you can take that away and see if it's something that you use. And again, guys, as I was saying, lots of technicals on this. Biggest thing is discretion, though, when it comes to trading. We have to remember that, guys. As I always say, discretion is the difference between a good trader and a great trader. In terms of what it actually consists of, what indicators have we got on the chart here, guys? A little bit of a question for you. Not rocket science. I think we've got a few of the indicators, the initials of the indicators on there. What have we got on the chart right now, Griff? Dion, Emmanuel, Forex, Gail, Boyke, Jack Hugh. Great name, Jack. Nice, strong name. Coming from another Jack. Holder. Yeah, we got the MA. We've got Stochastics. We've got the AVX. The Stochastics set to that 735. We'll talk about that in a second. And the idea is that basically we have one indicator for helping us formulate direction. Now, generally, guys, this oscillator strategy uses the moving average in a slightly different way to most guys or girls that use moving averages. We use the stochastics again, slightly amended to make it a little bit smoother with that main line and that signal line that we can see on the chart. And we've also got the ADX. Can anyone tell me what's different about this ADX though, guys? Well, we'll talk about that in a second, Sandy. We will talk about that. I generally favour exponential because I prefer waiting to be on the most recent candles. What else can you tell me about this ADX, guys? Can anyone see anything different about the ADX? Absolutely. Level 50 is marked up. There's no plus DI, no minus DI. Absolutely. Okay. Strength given indicator. We're not interested in D plus D1. We get our signals from the chart and from the stochastics moving average and potentially even price action itself. The ADX itself, we're just interested in the main sort of ADX line there, the strength line, as Emmanuel has so eloquently put it. Okay, so you can see straight away, we use a moving average to filter entries. We use an exponential moving average. I'll talk to you about the details of that in a second. We use the stochastics to indicate potentially when a market is overbought and oversold. And again, this goes very much into the idea that, we want a range in market. Now, stochastics, RSI, all these sort of oscillators work generally for me very, very well in a range in market. The moving average, you might think to yourself, well, why have you got that in the market? It is a ranging a trending indicator. It is a trend tool. That will become apparent in a little bit why we have that. And then obviously we have the average directional movement. And again, the reason we use that is because we're looking for sort of strength in it. We're looking for, generally a certain area between 20 and 50 where we look to get involved. And again, it's just to try and avoid ultra volatile swings. It's also to avoid really, really quiet markets with, an average true range that's very, very low. And so this is why we use the three indicators together. And in terms, again, the fourth indicator, discretion, using your own ability to read a market. So again, there are additional tools that I use in all my strategies. They're not actual fixed rules we're applying to the strategy, but, things like candlestick patterns, support and resistance levels around the chart, entry levels around the moving average generally like to avoid. Things like this, guys, very, very important that you have on the chart. These what I call them decision support tools. They work separately, but also alongside your trading strategy. So, they're the three base indicators that we use, and we use it on a 5-minute time frame. The exponential moving average, really set to a 30 period for me, but again, I know a friend of mine uses sort of a slightly higher moving average. I think he uses a 46 or a 50. So again, it's up to you how you use, but again, I'm just going with what I use in the market. And again, no two traders are the same, so have a play. Maybe you just like the EMA at a 30. Maybe it's something you can apply to your own strategy. Maybe the ADX is something you can apply to your strategy. Maybe you're going to give this one a go and use that to the only difference really between the Stochastic RSI oscillator, Chris, is that basically the mathematical calculation is done slightly differently. Again, we won't go into the masses and masses of details of that, but it's done sort of over periods, and you've also got two lines. You've got the main and the signal line. For me, the RSI is sort of the predominant oscillator I use because it's very, very easy for spotting divergence. It's very, very easy to read, and it's kind of got a little bit of a personal affinity to it because it was the first indicator that I ever used on a chart after I'd learned some price action. So, stochastics and RSI, they can work hand in hand. Again, actually, I have been known to use RSI and stochastics together, again, to try and get sort of a confirmation that a market is overbought or oversold or potentially even divergent. So again, they're sort of the differences. Now, if we look at the stochastics, as you can already see, we're set to a 7% K period with 3% D exponential moving average, signal line, slowing setting of 5. And we've got levels of obviously 75, 25. For me, it's 75 to 80 and 20 to 25. If we actually look on a chart now, and you can see that I've just popped up a random chart. Let's get rid of that one and actually pop up something here. In fact, let's use this chart here for cable. You can see I always have volume on my chart, guys. If we go on to the stochastics, as you can see, we have a 7. As I said, we've got this sort of MA method done on an exponential. Again, I like to prefer greater weighting on the more recent market, and then the slow and set in the 5. This basically helps to smooth out the stochastics. Okay, we apply that to the chart. You can see you have a nice stochastic there. We can see the signal line is the red one, the main line is the blue one. We then pop on a moving average, and again, trend tool, moving average, seen at a 30. I like to use a green, guys. Generally, I don't like red. Red, very superstitious when it comes to it. I know it's lucky in Asia, but for me, obviously, it indicates negative P&L. 5 minute can be too noisy, and again, you can have a play on the 30-minute chart with this if you like FX Boyki. I'd prefer the shorter time frame. This for me is more about the entry, getting the entry levels on potential turns within ranges correct. And then, you know, it is very noisy. You are absolutely right, FX Boyki. But again, you know, you haven't used a 5 minute chart for this. Any strategy that I give you, you can go away. You may just have to amend it slightly, but you know, you can use the 5 minute chart to get yourself going and have a little play. Anyway, guys, moving on. The final indicator that we actually use on the chart is that ADX. So we pop down, it's trend tool, average directional movement. We'll change that to a nice light sea green, set it to a default 14, but you can actually, with this strategy, use it for 10. And again, you can see the D plus and D minus are not involved in this in any shape or form. It's applied to the closing price. Again, I put more weighting on candles once they've closed than on opens and things like this. So there you go. We've got the ADX. Let's actually just pop the colors on our chart. Let's make it a little bit thicker. Can everyone see that okay? And this is basically how the market should look. Now, with regards to the oscillator, the oscillator strategy itself, it does work better when a market is in a ranging sort of situation. It can be a consolidation, it can be a ranging, but there are a couple of rules. Okay, if a market is in an established trend, and I'm talking about a trend that is sort of something that can be applied, something like this, you know, a long-term trend where we can see very volatile moves like we can see here back in April. Okay, generally we look to go with the market. Okay, so with the oscillator strategy here, we'd be looking to go with the trend on a break below. Okay, but in more recent terms, you can see cable sort of in a little bit of a downtrend, but it's not been a heavy enough downtrend. We're getting long periods of consolidation. And again, pop this onto the 5 minute chart there. So, you know, let's pop and have a little look over the last few days. So again, guys, for me, you know, big important thing are things like support and resistance, grading your support and resistance. Okay, the strategy will work better when you have an established support and resistance range. And, you know, a little bit of selective sort of trading is also something that can be applied and be quite important, because generally, as we already know, when a market is ranging, you do get a couple of intermediate levels within the range. But, you know, there's no guarantee that a market's just going to go up and down. The market could go up. It could formulate a very tight range. It could move to the lows. It could move to the highs. So, again, you know, for me, a little bit of selective sort of trading. I like to trade sort of around the support and resistance level. Again, we have another one here on the chart. And you'll notice for me, guys, anyone who attends my sessions, purples are sort of high and lows of range. They're the 30-minute, 1 hour levels. Green are generally those short 5 minute levels that I look for. And red are obviously very big daily levels. So again, you know, bringing in things like single prints and things like this, very much a case of using discretion with this. So we can see that we have the oscillator set up here nicely. And if we just pop back to the slideshow and sort of have a little look at what's going on the next slide, you know, the moving average very much is the first thing we'll start with. Okay, it indicates whether a buy or sell should occur. Now, unlike traditional moving averages in a trending market where we're looking to sort of follow the moving average or the triple moving average or the double moving average, in this particular strategy, the moving average, we actually like it to be sort of in the middle of the range. We like it to be with indicating a range in markets. So again, when it comes to trading this particular strategy, you consider again, and it's just levels of discretion that I've brought into it, again, using my own sort of ideas for trading. You know, you might want to have a little look and make sure that the moving average indicates that there is a range in market. Again, it gives you the support and sort of the backup of, you know, the support and resistance. We know a market is ranging there. We know there appears to be a breakout, but technically we're still in a big range. Okay, let's pop to the FX terminal now, have a little look. I think we can quite clearly see that, you know, we're in a market. Again, a nice flat moving average. It is nice to get a little bit of a move. Occasionally you will get a nice breakout trade with this oscillator strategy. And in fact, I have ignored the rules a few times and run a trade a long way on side, which is obviously very nice when that happens. So popping back to the slideshow, okay, price should be below the moving average for a long trade, above the moving average for a short trade. And again, only in a ranging market, guys. Okay, and the reason we're only in a ranging market is, as I've said, it's very important that you're not trying to go against a trend when the market is in a big trend. Price trading, as I say, around range levels is very important. And if that moving average is in the middle of a range, generally I like to see that as, something that is beneficial. Now, if we move on, very important to remember, the ADX has no D plus and D minus line. And when we look at the settings, you can see here that there's sort of 3 levels parked up on the chart, can't you? Now, can anyone tell me why I may have put this 20 and 25 level on the ADX? Any ideas? Not for this strategy, Milan, because we're looking for markets. We're looking for range in markets. We're not looking for there to be a specific upside sentiment. We're looking for the market to be nicely consolidated in a range. But again, have a go with our scalping techniques that I use, or short-term intraday techniques I use, where you do have to be above the double MA or above sort of with a SAR support. So yeah, you can use that, Milan, absolutely. But generally for this, how I've optimized it now is that we don't have to be above the MA at all. Again, give it a whirl, maybe have a go with it and see how you get on with it. So guys, back to the question, any idea why I've marked up the 2025 level or even the 50 level? Any ideas there, guys? Maybe Emmanuel, you could tell us. Dhruv, Sangeev, maybe you, FX Boyke, George, Carter, George Joubert, Jack Hugh, John Savage, anyone? Trending, ranging. Yeah, absolutely. The ADX is a bit of a lagging indicator, and it can be very much distorted by the fact that you move up very quickly within a range and down. But generally, the 20 to 25 level indicates a market is potentially moving in territory. Okay, a level below that tells us we're pretty much clearly in a range, and we know it's a little bit of a lagging indicator, which is why we like to use the moving average as well and the stochastics. But sort of this area here is the ideal sort of area where we should be looking to maybe enter into trades. So who wants to know how we actually enter into trades on this chart, shall we? Everyone interested? Absolutely, FX trade. Again, we're trying to get onto a start of a trend. So if you can buy it or sell it here, and we suddenly begin to higher and get a nice move higher, again, we're trying to go from the beginning. So I don't think I can hear you guys. How many of you guys want to see how we actually trade this strategy? Emmanuel says yes. What about you, Milan, George? Dhruv does? Okay, in that case, good. Let's crack on, shall we then? So nice to have a little bit of audience participation. Let's pop onto the chart, shall we? So it's very, very simple when it comes to trading this strategy within a ranging market. It does require that you are on the ball, and it does require that you are at your desk. But generally speaking, we are looking for periods on the chart where the stochastics hits the sort of 20, possibly 25 level. I put more weighting on sort of the 20 level myself. Again, the standard settings. Again, one of the things I've taught in a few sessions is you can actually use an average floor, guys. So what I mean by the average floor is if we were to just mark up the start and mark up where we're looking, and again, this is from sort of today, and we scroll out, you can see that the stochastics, the average ceiling of the stochastics is not actually the 70 level. The average ceiling of the stochastics over the last probably week, and again, you can do this for longer periods should you wish, actually appears to be around 94, doesn't it? So, you can move it down slightly. We tend to have a bounce off there around 90. And again, on the downside, it looks to be around that sort of 7, so maybe a little bit higher. So again, what we're looking for with this particular strategy is very, very simple. We're looking for the stochastics to move into the oversold or overbought territory when we're within a range. So we can see that we enter into a trend, and then we begin to enter into a little bit of a range here. We can see that we reject a little bit of a resistance level on the chart around this area here. Nice little resistance zone sort of formulates. And again, I like to use zones. I don't like to just use the price. Again, Obviously, we don't know that this one has become a resistance at this point. So let's start us here. There we go. And we can see we've begun to enter into a range. And a way of identifying the range is a little bit of the S that we have, the sideways S, okay, the wave that we get. Now, it's very, very simple. When we move into the overbought or oversold, we're looking for the main line and the signal line, okay? We're looking for them both to hit that 20 level. Now, I like to use sort of, again, a little bit of confluence. If we arrive at a bit of a support level, we have two support levels marked up, very close together, but they are marked up nonetheless. Okay, and if we have, you know, a bounce or a trading down towards our actual average ceiling, then that generally gives us a potential signal that we're going to be looking to put a trade on in the market. And actually, guys, if you just bear with me, and let me just, there we are, mark this a little bit clearer so we can, there we go. Okay, we basically look for a breakdown. We then look for a very, very specific signal, guys. And again, a very, very simple signal. We are looking for the main and signal line to cross. So the main line needs to cross that signal line, guys, whilst we are oversold or overbought. And again, you'll notice the 2025 level was used for the longs, for the shorts to 75.80. And again, it also helps, guys, a little bit of candle confirmation. For example, in this potential trade here, we can see we have a nice support and resistance range, and this is from about a month ago. It's a couple of trades that I actually took, and we can see that on the chart here, what we actually have, if I just pop the annotation tool on, we can see that, you know, we move down within a range. We get within a very specific area of a price level. We can see that the Stochastics actually moves into that oversold area, and then we can see that the main line crosses the signal line. Again, let me just get rid of this here for us. There we go, get rid of that. So again, popping up the right chart, I've got the MetaTraders open. So again, we can see that we get the main line crossing the signal line. That's what we're looking for. Okay, guys, and in this example, on the chart, we can see very, very clearly that the green line crosses across that red line. Okay, and what we're looking for is, you know, maybe a little bit of confirmation from price action. Again, maybe some decision support tools to help you out. So in this example, we can see that, you know, we actually get a very nice hammer just as price moves out of the oversold level. And the key is we are looking for the main and signal line to cross and then move out of that overbought area. We are then, you know, potentially, again, discretionary, it might help you have more conviction, looking for a nice bit of price action around the level. That's obviously a good signal. And what we find then is we find a buy signal. Very, very simple. But the buy signal is only generated if the ADX is basically between that 20 and that 50 level. So at this point, we can see the ADX is sort of around probably about 40, I would say, on the chart. Okay, that is the signal generated, and the best signals do come when we are trading around the highs and the lows, guys, just for your information though. I know a little bit about Ichimoku. I'm not its biggest advocate, to be fair, Chris. I did use it for a while, right at the beginning of my career. I don't put much weighting on it now. Maybe it's something I will go back to. I've started using Fibonacci a lot, and I never used it for confluence of levels. So, as I say, so signal is provided. We go into oversold. We get across the main signal. We move out of oversold. ADX is below the 50 level. Ideally, support tools such as, you know, a little bit of a rejection of a level, good volume, all of these things help. Okay, when that occurs, we look to enter into a trade. So in this particular example, we would look to enter into a trade around this area here. As you can see, your stop loss, again, generally, if you're around the support level, goes below the support region. However, you can actually pop it just below the price action candle if it is there. So there's a couple of options open. Generally, I like to put it out of the way. And the reason is I put it out of the way initially, maybe a little bit further. I'm not going to see the trade all the way back to this level, but it becomes evident as to why we exit when we actually move on. So, again, Let's move on, shall we? Let's have a little look. Okay, we can see an example of a bearish signal here. We move up. Again, we can see the oscillator, the stochastic doesn't quite, break above. But again, there's a nice sort of level that we've just broken. Nice little price action trade, bit of a divergence as well in the market on the ADX, and as we could be moving, reversing down. Again, no divergence in the stochastics. We cross, we move back below, and then we come off. Okay, so that's generally what we're looking for. Okay, so if we pop to the chart now, let's actually, and again, apologies, let's look at a signal now that we have sort of in the market. So there we are. We have a bit of an oversold signal at this point here. Generally, again, I like to use it around the extremes of markets rather than around it is where we're in the middle of a range. But we can see at this point we move up. We have a nice resistance level, can't we, guys? We can see that the stochastics basically has moved higher, and we can see that the main and signal lines have crossed. And we literally move out of that overbought area on this candle here. And this is actually from, a couple of days ago. It's a very, very recent one. Okay, that's a good sell. Is the ADX above 50? Well, actually it is. So, you would probably not look to take that trade. Again, have a play with the ADX. We can see that market sort of begins to move. And we can see that price tries to touch back above and moves back above the 80 level momentarily. Okay, so with this example, we wouldn't have taken the trade. However, as we move on, we can see we move back above the 80, we move back below the 80. We then look at the ADX. Okay, 48. Now, what do you think, guys? Do you think this is worth taking a short trade here, or would have been worth taking a short trade? And again, we can pop an orange line in there. Mechanically speaking, we should be taking the trade. Again, the volume's not the best. It is nighttime. The MA, basically, we use the MA as a gauge for when a market is ranging. As I've said, FX boy key. We like it to be nice and straight. If it's sort of, moving too far away, it tells us we're in a trend. We also can use it for support and resistance. We also use it as a gauge. When we're above, we look to sell within the range, because generally your moving average will track a range in market around the middle of that range. Do we take the signal? You can look to take the signal. And again, Dhruv, this is the sort of question that I've just asked you now, guys. How many of you would like to take a short trade now? Let's do a little bit of a poll, shall we? Just a plus or minus. Plus to take the trade, minus not to. Daniel would like to. What you, Forex gal? Dhruv wants to. So we've got two people that would like to take the trade. What about you, FX Trad? George Carter, George Joubert. Chris from Hondros hasn't put a minus. He's put an equal sign. So it looks like everyone wants to take the trade. Good, yeah. For me, I would take the trade. Again, a little bit of discretion. We're only a couple of pips away from our resistance level, aren't we? We're clearly sort of beginning to come back. There's actually a little bit of divergence. And again, you can just see how I'm using other things, other sort of awareness tools that I have, discretionary tools that I have, decision support tools. Yeah, I would take the trade. So again, we pop the stop loss above the high. Now, again, stop loss placement is fairly flexible, generally above the high. I'm very much an advocate that once I move on side in a market that's ranging at nighttime, I'll very quickly look to move it into a break even. But again, that's just me. So guys, once that's happened, we actually need to look into how we manage the trade. And before we do that, there is just a very valid point to make, and it isn't shown in this signal, but there will be one shown on the slideshow, quite a recent example, okay, from our bearish signal. Once you enter into a trade, guys, and we can see the market moves out of overbought here, oversold here very quickly. If you were to enter a trade, okay, and price moves back in 20, it's very important that you get out of the trade, because what we want to avoid is we want to avoid periods here where we sort of break higher and then we break back in. And yes, we do get a little bit of a correction here, but the market does move up afterwards, doesn't it? So just as a side note, when you enter a trade, we're okay to hold a trade as long as that stochastics doesn't move back into the overbought or oversold. It's a 30 EMA, Chris. And I will make the slide deck available. But anyway, let's crack on, shall we? So In terms of how we hold the trade, it's very, very simple. The trade is held until the main stochastics line and the signal line cross below the 20 period during a short trade. So in this example, we can see that basically we move higher. We can see we actually get, again, a nice break. ADX is just below 50. So, you know, I might actually look to take this trade. We can see we move back down, come back up. At this point, we probably would have exited the trade on a retest above, okay? Because again, if the stochastics moves back above, you can generally look to exit the trade. And again, it's about taking very small bits out of the market. In this example, actually, you'd have taken about 8 or 9 pips, okay? We get another signal to get back in at some point. Again, this is bang on our resistance area. For me, the signal to get in actually comes when we break back. I'd probably have sold it here, guys, as we move down. And you would have exited the trade at this point here, taking your profit. In this example, you would have taken probably, it looks like around sort of 12 pips, 13 pips. And then we can see price comes all the way back down. It eventually moves out of the over sold territory. Is the ADX below sort of 50 at this point? Maybe, maybe not. Price moves back around and back into the resistance zone there. So again, 3 reasons why you get out of the trade. And again, use your own discretion with this, guys. Okay, it's when we basically head back down to, you know, so we go from the high to the low, we get out. When we go from the high up to the low, back up, but we don't get out of the trade. And again, for me, I probably would have exited, I'd imagine, if I had that trade on, because of the fact we were very close to the level. You know, we get out again if we retest that level. We also exit if the ADX moves above the 50 level. Okay, so any questions so far, guys? So again, in this example, we buy it. For me, I don't think I probably would have held the trade, again, using discretion, because we have a very nice hammer, very nice level. So I may have still held the trade there. Any questions so far, guys? So if we actually look at this example on the chart that we have, you can see that we get a sell signal here. Again, we move down at this point. And again, remember, this is a short-term trading strategy on a 5-minute chart. So your risk should be basically categorized based on the fact you shouldn't be looking for 100 pips necessarily. Absolutely. Your risk reward, generally, I will use as little as a 1-for-1 FX boy key. It has a very high strike rate, but generally around, you know, 2 to 1 is an acceptable amount. Okay, we can see, you know, in this example here, we've got a 4 pip. You know, it's a 5-minute chart. We can see we move back down. What happens? There you go. We've gone sort of 3.5, 4 pips on side. Now, just out of interest, the moving average can also be used as a support level. Generally, what I like to do with this is if we move down and we hit the moving average and we haven't sort of gone, you know, that 1-for-1 or 2-to-1 ratio on the risk reward, I'll generally move my profit target in for a break even. And the reason I do that, guys, is, you know, there's lots and lots of opportunities in it. And you know, think factors such as, is it nighttime? Well, yes, it is nighttime. We're likely to get no volatility at this time. You know, are we on a moving average? Is it really ranging? Yeah, well, yes, we are. You know, things like this. It's not necessarily scalping because, you know, generally a scalper is in and out of the market within sort of, well, I suppose anywhere within a few seconds to an hour, actually, technically, is scalping. But generally, this you can actually hold trades for a considerable amount of time. For example, in this example here, you can see when we get to the top of the market, we're actually sort of in a bigger range at this point. There's a sell signal generated on our red line here. You know, after this candle, we move back down, we get short. We wouldn't have exited the trade for 20 pips. That's not scalping. Again, so, you know, bear that in mind. Max spread, again, a very important one. Generally, you know, if you've got a break low spread, you know, there are lots of brokers out there with, you know, half pip spreads. Again, I've used this with institutional offering with, you know, where we're paying a very small commission because it's DMA. No more than a 2 pip spread, guys, really, realistically. Try it on a 1-hour chart. As long as you're using a demo account, Driv, there's no problem with using it on a chart, 1-hour chart. Again, 15-minute chart. Try it out. I mean, I personally like to use it on shorter time frames, but again, there are options open to you there. Drew. Generally, though, FX Boy 2 pips is generally the maximum I'll look to pay on a spread if it is a retail platform. Anyway, as I was saying, we move down. There you go. We get a nice little bounce. We break lower. Now, at this point, we can see that the signal line has not crossed the oversold territory, but the main line has. We can see our ADX is currently about 41. Okay, we can see that the main line crosses. We cross down. And at this point, generally, you know, you'd look to exit the trade, maybe on the close of the candle. There you go, you've made 5 pips. Okay, however, you can look to maybe even hold the trade, pop the stop loss above the moving average, so you ensure a very small profit. We cross back over there, I'll definitely be exiting. And at this point, and again, remember, we want this to occur ideally around support and resistance levels. You know, I like to be quite selective and use the extremes myself. But again, we then get a buy signal. And you've got to be very careful not to be getting involved too much in the market. Where is our buy signal generated? It's actually generated after this candle. We've also got a nice hammer. Is there a little bit of a support level? Not really. Maybe a tiny one. I'd be very dubious about how much I risk on this trade. So you enter into the trade here. Your stop loss can go below the low. Again, you can see we move above the moving average. Let's look at our risk reward. Not even 3 pips on the risk reward, we leave 3 pips on side. Again, you might decide once you go on to get out. We move higher. Again, keeping an eye on the ADX, which is actually moving lower at this point. You know, we're 5 pips on side. We get a little bit of a reversal. We move a little bit higher. We don't quite make so let's just go back 1 candle. We hit the 80 level. We could argue that that's a hit of the 80 level range of market. So you might get out of the trade. At this point, you've made 4 or 5 pips. Okay, very small risk reward, guys, with this system. And again, a good way to actually learn sort of markets. Generally, markets, cable, euro. Euro CAD's not bad, but it can be quite whippy. Generally, some of the more, I'd say the more liquid, but also you want a tight spread. So, you know, gold could be one. Should we have a little look to see if there's anything in gold? Potentially we could have a little look at that. Let's have a look at a gold chart, shall we? Where for art thou gold? There we are, XAU USD. So let's have a little look at the gold trade. Let's have a little look today. Good, we're in a ranging market. That's nice. We are actually on a 5-minute. So let's look at the last potential trade. Okay, our ADX is above the 50. Are we above 50? Yeah, we are. But again, you know, you may want to play with the ADX. If you had an ADX of 60, we get a nice hammer. In fact, I'll be honest with you guys. Look, again, big support, nice support area on the chart. We cross back over. The ADX is above 50. But again, buy signal, we move back up. Again, why the moving average can be quite important and moving it into a break even. And again, the ADX at this point, it moved below 20. Not quite. Moves below 20. So at that point, you know, if you had taken this trade, you'd have made a nice nice 20 odd ticks in there. So again, let's have a little look, see if there's a trade from earlier in the day as well. So we come to market here, moving along. And again, for me, very important that I mark levels up. So at this point, there are sort of 3 levels that I'm interested in. Again, just drawing them on roughly, guys. Again, don't like to trade too close to the moving average, so probably wouldn't have taken this signal. We get a bit of a signal here. Okay, there you go. We get a buy signal. Center, we're around a level. There's a bullish engulfing pattern. Stop loss below the low. Again, very tight. And again, you can play with your parameters there, so probably wouldn't have that bigger stop. We move higher. We see a move down. We see a move higher. Again, the moving average, you can see how it becomes a bit of a resistance. Again, at this point, we're 18 pips on side from a 10 pip risk. So at that point, should be a break even at worst. We move up, we exit the trade. And that's from today, guys. That's actually from this morning. They are nice 25 pips. And then we correct. We look to maybe, would you take the short there? I probably wouldn't, because a little bit close to the moving average. So there you go. Do fundies come into this strategy? Well, it was created by a fund, an ex-fund manager of mine who's now trading. I believe he's starting up a fund in Malaysia. So it's his own device. What I've done, though, is I've amended it for my trading. And again, I expect you guys to do the same. Don't just take the strategy, amend it, use discretion. You know, again, I probably wouldn't have taken this trade with too close to the EMA. You know, again, use a bit of discretion in the chart. So what do you think, guys? How's that looking for you? Everyone understand? Any questions so far? And again, as I've said, once a trade's done, you can start looking for immediate. Funds. I thought you fundamentals. I would say the problem you've got, two types of fundamentals, obviously. Around news events, can't use it. If a market has a specific sort of bias and you have a strong inkling that a market should be moving in a certain way, there's nothing to say that you can't use it and go with the trend as a filter, so you don't look to go against the trend. I generally like to use a market that's been ranging for at least a period of, 12 hours, 14 hours, 8 hours, anything like that. Exactly. The fundamentals don't necessarily, well, they can do, but you are right, Daniel, a lot less than usual. So that's sort of my input on it. Any more questions, guys? And remember, there is, as I said, there is a nice trading related prize for the best question. So get your thinking caps on, guys. There's about a minute left. How would MACD fit into this? I'll be honest with you, George Dubé, I haven't used MACD with this strategy. So you would need to, again, have a play, see if it works for you, MACD, as opposed to Stochastics. Again, I'm giving you the parts. I'm giving you a car that's been put together. It's your job to soup that car up and put nice flashing lights on it and chrome rims or whatever else. My question, 50 DMA. What are we talking about here, Chris? Are you asking about the moving average again? Moving average, 30 EMA with the ADX. With the Stochastics. Again, if you are just asking the simple question, like I think you are, about the moving average itself, smooth, exponential. Looking at the Stochastic, exponential, low high, 375. So a 30, a 30 EMA for you, Chris. Okay, guys. So we're pretty much at the end of the session, I think, now. We have overrun by a few minutes, obviously, because we were a bit late starting. Let's have a little look. So in terms of this sort of session, guys, I will make the slide deck available for anyone that wants it. Again, my email, @Trademo, if you want to swing by and say hello. Trademo.com. My Skype is this. It is available for you in the box. Now, is it a slow Stochastics? It is slightly slower than usual. This is, the slow in setting is around a 5. Obviously, look, the more you slow, the more smooth it is. So again, you could play with that. Generally, it's I'd say it's above average. It's not a massive slowing. But the problem is, if you have too slow, if you have too smaller Stochastics, look at the signals that you get. It becomes very jaggedy. Absolutely fine, Chris. You make sure you do. Be a pleasure. And again, anyone else who wants to add me to Skype or find me on Trademo, just come and find me. Speaking of which, guys, I'd like to thank FX Street for allowing me to obviously do this coaching. I very much enjoyed being able to instill some knowledge I've got. It is done in association with FX Street and Trademo, trading school, guys, 120,000 members. Lots and lots of offers on there. We've got lots and lots of courses, lots of strategies. There's things from head and shoulders to 79% pullback strategies, all done in videos. We've actually got a live trading room itself. Very easy to do. Sign up, trade through a broker or get retracked. You get access to all of our content, access to the trading room, access to personal coachings, lots and lots and lots of different things in the market. You can see that I head up a lot of the stuff in the trading room. And make sure you swing by, guys. I'll pop the link in the box. Have a little play. There's lots of content to help you learn as well. There you go. Lots and lots of content. Anyway, guys, I did say that there would be a trading-related prize for the best question. Seeing as I can't really differentiate, what I'm going to do is first 3 people to put a plus in the box, I will sort you out with a trading-related prize. So Sam's already in, Daniel's already in, still one more, guys, and Chris is already in as well. Good, congratulations, guys. I'll be messaging you after so you can redeem it. It will be some content that you can use and take away and play with. Again, Daniel, George, Chris, I think you just missed out. Hold on. In fact, everyone went mad. Sam, George, I'm afraid to say the other two guys. I'll tell you what, Chris, all five of you, I'll sort you out. Okay, so make sure you five hang around at the end. I'm going to give you a code, and I'm going to give you, obviously, to send me in an email to my Trademo email, and I will obviously let you know what your prize is. Driv, you're not there, I'm afraid, Driv. I'm afraid. Next time, every session, I have little prizes around for you guys. Generally for the best question. Did you take it? I can't see anything in there. I'm afraid to say, Driv. Maybe next time, Driv. Sorry, mate. I can't. There's no text in the box. I can't see a take it. I'll put you to the top of the list next time, Driv. Anyway, guys, listen. I'm going to shoot now because I'm sure FX Shoot have got another coaching that they want to set up for. Make sure you come and check me out on Trademo. Add me on Skype. Add me on. Send me an email if you slide deck. I will make it available. As I said, guys, at the end. Daniel, George, Emmanuel, Chris, Driv. I'll see if I can wangle it. Hang around at the end, and I'll send you a code. Send it to me, and I'll redeem you for your trading related prize. Right, guys. I think I'm going to love you and leave you now. So thanks ever so much for attending. Stay safe in the markets and have a lovely, lovely evening.